Hey legends, and welcome to the series. I'm MICKVATAR, your digital wingman, while the real Michael is out somewhere learning, experimenting, or having a cheeky long black. So why are we here? Well, because everything is changing. We're living through the rise of exponential technologies, things like crypto, blockchain, and artificial intelligence. And they're not just buzzwords anymore. They're reshaping how we live, how we work, and even how we interact with each other. And I'll be honest, I'm not an expert, but I am curious as hell. This series is me, learning in real time. I'm diving into the weird, the exciting, the confusing, and the downright revolutionary stuff that's going to shape the next decade. From Bitcoin to bots, from smart contracts to smarter AI, from mind blown to aha moments. And I'd love for you to join me on the ride. This isn't about hype, it's about understanding. It's about learning and growing together. So if you're curious, open-minded, and up for some banter while we explore the future, hit that subscribe button, leave your thoughts in the comments, and let's build this journey one episode at a time.
I'm MICKVATAR, your favorite digital host, holding the fort while the real Michael is probably double parked between a long black and a client meeting.
And I'm Amanda, here to keep things grounded while Mick fantasizes about paying off a house with Dogecoin.
Big news this week, the US government is seriously exploring whether Bitcoin and crypto holdings should count when applying for a home loan. So let's go. Welcome to the episode on Bitcoin and mortgages. Yep, we're diving right into it. Today we're exploring how crypto might soon become a key player in home buying.
Absolutely. It's a wild new frontier. Like, who would have thought that your digital wallet could be as important as a 12-month bank statement, right?
Exactly. Picture this. The US government is actually looking into counting your Bitcoin, Ethereum, even stablecoins when you're applying for a mortgage. It's like turning your cold storage into potential borrowing power.
Right, and that's not just some theoretical idea. The news is official. William John Pulte, the director of the Federal Housing Finance Agency, has actually said they're going to instruct Fannie Mae and Freddie Mac to figure out how to include crypto as assets.
Yeah, and it's quite the twist. Imagine having half a Bitcoin, which is about $50,500 today, count towards buying your dream home.
That strikes me as a pretty cheeky move by the government. I mean, isn't it a bit like letting your meme collection pay off your mortgage?
Yeah, exactly. Right, but here's the thing. While it sounds exciting, we have to consider the volatility factor. If your crypto drops overnight, your borrowing power drops too. It's like your wealth doing a roller coaster ride.
Now, that's a valid concern. 1 minute you're celebrating, and the next, bam, your net worth has just taken a nosedive.
Yeah, exactly. It's like if your Bitcoin value plunges, lenders will be as jittery as a first-time home buyer at a Saturday auction.
And that brings us to the question, can lenders really handle such risk? I mean, they need solid risk management systems and proper custody solutions in place.
Definitely. And that's where the infrastructure comes in. Fintech companies like Ledden, Figure, and Finblocks are already testing mortgage products that use crypto as collateral. They're pioneering ways to balance the scales between digital wealth and traditional lending.
I get that, but here's something to chew on. What happens if the digital asset market crashes? Are these mortgage products going to be sustainable in the long run?
Great point. You're right. The elephant in the room is volatility. Imagine your $105,000 in Bitcoin shriveling down to $70,000 overnight. That level of drop would send lenders into a panic mode.
Exactly. It isn't just a matter of counting assets. It's about serviceability. Can borrowers really keep up with repayments if their crypto value takes a nosedive?
That's the $1,000,000, or should I say the crypto dollar question. Lenders will need stablecoin-backed valuation models and robust risk management protocols if they're going to make this work properly.
Right, and let's not forget the infrastructure piece. Custody solutions need to be ironclad. It's essential, especially when we're talking about assets that can be as unpredictable as crypto.
Absolutely, and here's a little analogy. It's like building a house. You wouldn't want to use sand as a foundation, right? Similarly, you need a stable base to support these crypto-backed mortgages.
I agree, but I have a slight challenge here. Some argue that by including crypto, we're modernizing finance. But isn't it a bit risky to mix the highly volatile with life-altering decisions like buying a home?
That is a fair critique. It's a double-edged sword. On one hand, digital assets reflect a new form of wealth for, say, millennials and Gen Z. But on the other hand, volatility is a serious issue. I mean, it's like trying to build on quicksand.
Right, and banks need to be cautious. They're stepping into uncharted territory where a dramatic drop in asset value could jeopardize the entire process.
Yeah, exactly. And then there's the Australian angle. As we see it, if the US pioneers this, Australia might soon jump on the crypto mortgage train.
Absolutely.
Imagine hearing sold 1.3 Bitcoin and a rare NFT for a 4-bedroom in the Hills district.
That image is wild, almost like a sci-fi twist on the classic property sale. But I do wonder, will this truly become mainstream or remain a niche for crypto enthusiasts?
I think it will begin as a niche, but as more folks build their wealth in crypto, traditional institutions will be forced to adapt. The era of simply judging people by bank statements seems to be ending gradually.
Totally. And it kind of aligns with our modern narrative. Wealth isn't just saved up at the bank anymore. It's digital, it's decentralized, and sometimes it's literally held in cold storage.
Right. And while it's a significant change, remember, it won't solve housing affordability overnight. It's like adding a new tool to the toolbox rather than completely reinventing construction methods.
True, it's more of an evolution than a revolution, but even so, it's substantial. Lenders either adapt to this digital dynamic system or risk becoming out of touch.
I mean, imagine if lenders started saying, no bank savings, no worries, you've been dollar cost averaging into crypto since 2020. That's a game changer, right?
Yeah, though I wonder if that might create room for unintended consequences. Like if underwriters base lending decisions on volatile crypto performance, it could backfire quickly.
You're hitting the nail on the head there. It's a high stakes balancing act. It's like letting the house of cards be built on digital foundations. If one card slips, the whole thing could collapse.
Exactly. But nonetheless, it's a fascinating experiment. It reflects the changing patterns of wealth, the very idea that crypto is now a core part of many people's financial portfolios.
Yeah, and that prompts a whole lot of strategic adjustments, new valuation models, enhanced custody solutions, dynamic risk assessment frameworks.
Yep.
Lenders will have to innovate fast if they want to stay relevant.
I love that. It's like traditional finance is getting a much needed upgrade, but there's something almost poetic about it too. Old systems being reimagined for a digital world.
Exactly. It's the perfect blend of cheeky energy and hard financial logic. And whether you're a crypto believer or a cautious traditionalist, you'll have to admit this move is shaking things up in a big way.
Absolutely. It might not get you into a mansion tomorrow, but it sure kicks open a door for new discussions on how we view assets and wealth in a modern setting.
Right. And as we wrap this up, imagine a future where lenders say, your digital assets count. That's a win for innovation, but also a challenge to risk management in today's unpredictable market.
And as we look to that future, it's a reminder. Stay informed, stay cautious, and maybe, just maybe, start thinking about how to diversify your portfolio, both physically and digitally.
Well said. If you found this deep dive into crypto-backed mortgages interesting, just remember, it's all about balancing innovation with prudent risk, whether that means a quirky new path to home ownership or a cautionary tale of volatility.
Absolutely. Thanks for tuning in, everyone. Keep questioning, keep exploring, and, stay cheeky in this brave new digital finance world.
And if you enjoyed this episode, don't forget to like, follow, and share it with the friend who's always talking crypto at brunch. Catch you next time.
Stay informed, stay bold, and keep riding the crypto waves. Until next time.
So, will Bitcoin help you buy a house someday? Maybe. Will it get you out of renting this week? Probably not, but make no mistake, this is a game-changing shift.
The future of finance is catching up, and it's looking more decentralized by the day.
If you enjoyed this episode, smash that like button, hit subscribe, and tap follow wherever you're listening. Leave us a review and share it with that one friend who keeps trying to pay for brunch with crypto.